Imagine for a second making $104,000 just by owning some real estate. This is how much I made in my first year of investing in real estate, and it took me about 1 to 2 hours every single month to manage these properties, so it was pretty passive. Not all the $104,000 came from what I like to call as my version of house hacking, but $61,000 of the $104,000 came from this. With my version of house hacking, I didn't live in a duplex, triplex, or fourplex. I didn't have to deal with any tenants, so that's why in this video I'm going to show you my version of house hacking so you can kickstart your financial freedom in just 1 year. So if you're ready, go ahead and hit that like button for me, turn it blue so I know that you're interested in this type of video. So let's get into it. 3 years ago, whenever me and my wife were living in Colorado, we were driving around these neighborhoods just looking at beautiful houses. Do you ever do that? Do you just start driving around neighborhoods looking at real estate just for the sake of it, just for fun? If you do, comment dreaming in the comments down below so I know that you do that as well and I'm not the only one. As we were driving around the neighborhoods, we saw a property that had a coming soon sign in their front lawn. What this means is the agent is going to be taking this property on the market within a few weeks. I knew what the properties were worth in this area before we even started driving them, so I knew this property was worth $350,000 easily. What I did next was I pulled my car into the driveway, got out of my car, went up and knocked on their door, hoping to speak with the homeowner. A few seconds later, a person opened the door, and to somewhat my surprise, it was a homeowner, and it was a surprise because I didn't really expect anyone to be home. Now, if you know anything about real estate, getting in touch with the homeowner in an off-market property is key to creating a killer deal because you can start negotiating with the homeowner. After talking about football, figuring out what the reason was why he was selling, I told him I wanted to buy the property for $320,000. Now, what I expected was him to come back and say, no, I want to sell it for $350,000. Well, actually that didn't happen. He accepted my $320,000 offer as long as I could buy the property within, it was like 35 days because he needed to move. Something I should have done and something you should take note of, have them sign a contract right then and there, because he could have easily just went back to his agent saying, hey, I had someone knock on my door. He offered me $320,000. What do you think? Then the agent would tell him like, no, we want to get top dollar. We're going to sell it for $350 on the market. But thankfully, the homeowner didn't do that. He held up to his word and we bought the property for $320,000, banking $30,000 within the first day of us owning the piece of property. But before buying the property, again, I already knew what the property was worth. It was worth $350, but it also needed to meet one other criteria for me to feel good about the purchase. I need to know that if the market downturns and we had to move at the same time, that we could rent out the property, either break even or make a little bit of cash flow. This is our insurance in case the worst thing happened, was if we had to move and we tried to sell the property but the market downturned, we need to know that we could be able to hold onto the property long enough for the market to raise back up and then we could sell it. Thankfully, the property met my criteria, and if you're wondering how you can do this yourself, keep watching because I'm gonna get into that. But before I do, hit that subscribe button down below and click the bell icon to get notified and upload a new video just like this one, helping you create a life you love with real estate by teaching you the ins and outs of real estate investing. I told you earlier in this video that I knew what the property was worth, and that's correct, but what I didn't tell you is I knew what the market was appreciating, and what appreciation is basically the value of the property going up. With this particular market, the market was appreciating about 10% a year on average. What this means is, yes, we bought the property for $320,000, but it was worth $350,000. So it's appreciating at 10% of the value of the property. So 10% of $350,000 is $35,000. That's exactly what happened. Is after a year, we sold the property for $381,000. It was just a little shy of 10% appreciation. So it's like 9.8 or something like that. But we sold it for $381,000, making gross $61,000. Now this is before we had to pay our capital gains tax, but this is how much hit our bank account. I'll get into a reason why you want to sell the property within 1 year and actually take the hit of capital gains tax, but I'll get into that in just a second. But I'm going to show you how you can do this practically. First, you're going to want to find a property in a high appreciation market. You can do this how I did it, which was driving neighborhoods, talking to homeowners, or you can actually download my free ebook in the description down below this video. It's my 13 ways to finding off-market properties ebook. So if you want all 13 ways, go ahead and download that ebook. But if you want to do it how I did it, you can go around driving the neighborhoods and start talking to homeowners yourself. After that, you can buy the property for 0 to 5% down using an FHA loan or a conventional loan. Live in the property for 1 to 2 years depending on tax purposes. So what I was talking about earlier is you could live in the property for 1 year, sell the property, take the capital gains tax hit, roll those profits into another property, and then you can start cash flowing from that property. Or you can live in it for the last 2 to 5 years and you can avoid the capital gains tax. Now get with a CPA or tax attorney, whoever that does your tax taxes and make sure that this is the correct strategy for you, because it depends on everyone's situation. But what we did is we sold the property in 1 year, we took the capital gains tax hit, and we decided to roll those profits into more and more properties. Now, again, like I said earlier, we made $104,000 on our first year of investing in real estate. So we made $61,000 gross with this property. We made $43,000 on another property, and we used those profits to invest in more real estate. Once we rolled those profits into more real estate, one of us is actually able to create our financial freedom just from that. If you made it this far in the video, comment in the comment section down below HHH for Holloway house hacking. Lame, maybe. Well, I'm a dad, so I can kind of get away with it. But if you didn't want to download the free ebook, there's going to be a video popping up right here that I show you exactly how to find properties for free every single day. So if that's something you're interested in, go ahead and click on that video right here. But until the next video, I'm out. See ya.